3 smart money rules you must follow. You guys, this video is going to be what you need to get you to where you need to go. To understand how to start trading Wyckoff, where you're going to find Wyckoff schematics in the market. Okay, we're not just trading random order blocks, random imbalances. This is what you need to know and follow on a consistent basis to really be successful with smart money concepts. Number 1, understand the highs and lows for structure and not the trend. And here, we're going to explain. Okay, so where's the highs and the lows on the screen? They are here, 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 here. So this is the structure. Now, where most people mess up is that they label this as structure. Let me change the color for you. Is in here and say this is structure. This is not structure. This is a whole lot of nothing. That means nothing to us. Why? Because what is this telling us? Is this telling us that this was a downtrend and now it's an uptrend? That's where most people mess up, because that's not how it works. We want to focus on the highs and the lows that are maintaining structure. So now that we have the highs and the lows, we need 2 highs and 2 lows. So it could be higher highs or higher lows, and that's going to tell you what the structure is. So high, low, lower high, low. At this point, we are in down structure. Now at this point, we have another lower high and another low, so we're still in down structure. Now, at this point, we created a new high and new higher low. Guess what? We're still in down structure because we only have 1. We don't have 2. We don't have 2 new highs to work with, okay? You need 4, you need 4, you need 4. So that is rule number 1. You need to understand just because you get a new high and low doesn't mean you're down structure, okay? Just because you have all these little pieces inside doesn't mean that's your structure, okay? So number 1 is structure is your highs and lows. Number 2 is wait for price to come to a point of interest. Okay, so right now this is our current price, right? So even though we have this high and low, we're still looking at this range for a 50% pullback to go low. So that means, where are we going to wait for price? And this is where most people that come from retail, they just get on and trade, and that's not how it works. You have to wait in the right place for price to come to you. So in this case, from here to here, we need to find a 50% pullback. Anything 50% and higher is what we're going to look to enter off of. So this is the 50%. So anything above this 50 is where we're going to look for what? Points of interest. So your point of interest can be your order block or imbalance, okay? And here we see an order block. A lot of people get order blocks wrong, so click this card above to understand order blocks on its own, because I see so many people mess that up. A lot of people taught a lot of different things about order blocks, but definitely check out my video. And this is imbalance. So you want to trade the highest point of interest. So we have this complete fill and imbalance, and then we have an order block. So we're going to wait for price to come here. And if price passes through and comes here, then we're going to react here. Okay, so these are the 2 areas where we're going to set our alarm. All right, you guys, I want to tell you a little bit about my course if you want to learn more. If you don't want to join a course, it's completely understandable. Stick on YouTube. But I do like to explain to people how to get success in Forex, okay? So I've extracted all of my knowledge into this self-study online institutional course that you can learn exactly the steps I've taken to go from huge losses and blown accounts to being consistent with 1 to 10 trades. Guys, stop losses that are less than 10 pips, 100 pip take profits, okay? This is how you can consistently have small losses and big rewards, okay? And you also get to join the group chat access. So yes, it's self-study online, but after the course, you're going to join the group chat where you get everyday access to team Zooms, daily recordings, motivational Mondays, affirmations. You're going to learn about breaker structure in the chart gallery. You're going to learn about distribution in the chart gallery. You're going to learn about accumulation in the chart gallery. And if you're wondering what the chart gallery is, it's literally a place where I have hundreds of charts and examples of actual Wyckoff trades that I've backtested and taken, that you can have those examples to actually know what you're looking for. The problem is people don't know what they're looking for because they're learning and they're just kind of learning from themselves. So you're going to be definitely a lot better in understanding smart money concepts in a short period of time, working with people that are actually going to tell you what you're doing right and wrong. So instantly take your skills to the next level by enrolling in an easy to follow step-by-step course. If you're struggling on consistently being profitable, okay, do your charts a favor and make sure they look like mine or anyone else that's in my team, so you can actually get the success that you need in looking for Wyckoff trades. Okay, you'll be able to learn how to find high probable opportunities and be a consistently profitable trader. Now let's get to step 3. Step 3 is to know where you are in the market cycle when you're in a point of interest. Know where you are in a market cycle in that point of interest. So let's talk about what that means. We're here, right? So if price comes here, what are we looking for? And I want you guys to ask yourself this before I say it. What are we going to be looking for in this point of interest? We're either going to be looking for a distribution in this point of interest, or you're going to have an alert here, and you're going to have an alert here to see if price creates a new low. Okay, because what if price doesn't come up, it goes down, 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 and you don't notice when it happens. So, ooh, price went down and created a new low, and look at this body. Okay, we broke this low with the wick, so we created a new low. So again, like I said, we're still in down structure. So however, look at the UPA here. Let's look at this point of interest. Now this is where we want to look for price to either stop here first before it goes up here. Okay, because this already had its own mini retracement now. So let's look here. Okay, now one thing I noticed, and this is actually a trade that I took, so I'm just explaining how I got it, is that we have these highs and lows that look like a schematic. So I'm going to break that down a little bit, not too much because it's not a schematic call. But let me just quickly mark this up to show you that we have a what? Down schematic, down, looking for the entry. What is that? It's a redistribution, okay? Okay, so in this case, like I said, we actually have a schematic, so we're not waiting for a schematic here. When it's a redish or reaccumulation, it could just happen at a new low, schematic, and an entry. However, we're still waiting in a point of interest, right? So, as you guys see on this time frame, let me go to the 30. This is our imbalance, okay? And this is where pricing gets filled. Entry and exit. Take profit smashed. New low created. Down structure. Okay guys, so that is how, okay guys, so those are the 3 rules to understanding smart money concepts. You want to understand your structure. You want to understand where you're waiting for points of interest to come to you. We're not getting on the charts, we're just trading random things because we want to get on a chart and we will expect money. That's not how it works. Right place, right time. And the third thing is what you're actually expecting to happen in this place so you can know how to execute it. Thank you guys so much for watching. Hope you guys got value, and I'll see you guys in the next one.